Let's go to Dave in Clearwater. Hey, Dave, what's going on?
I just wanted to express a flat-out thank you, Tom. I've learned more about trading from you than about any other previous 3 or 4 books that were combined, and I just wanted to extend a heartfelt thank you because you've helped me make a lot of cash, man. There's no two ways about it. Not only just through like insights, but just the things that I've learned from you, and being able to call trades on my own.
Now, Tom O'Brien.
Welcome, folks. I'm your host, guest host, Steve Rhodes, filling in for Tom O'Brien. This is the Tom O'Brien Show, and thanks so much for joining us. I absolutely love being here with you. This is my favorite time of the day. I kick things off for TFNN at 9 a.m. Folks, you can watch us live on Tiger TV. All you have to do is go to the homepage at TFNN.com. Up in the upper corner, you will see Tiger TV. Click on that. You can watch this show live. My shows are archived on Channel 14. I do the 9 to 10 o'clock show. Get us kicked off. So if you're wondering what's going on in the markets, you know what the futures are telling us. We take a look around the world. We take a look at our markets, see what's going on. I give you a good start to the day so you get an idea of what the markets are exactly doing. And in these days, you've got the markets there up, down, and all around, as Tom likes to say. And so I give you a pretty good feel of what's going to happen because we take a look at patterns out there. We'll take a look at sacred geometry and call-in show, just like this call-in show, 877-927-6648. And you had the Dow down 21 points, the pretty flat market, you'd have to say, right? You have the S&P down 0.61, so flat enough to ski on. And you've got the NASDAQ, that was up 1.9. Russell, you can also go ski on the Russell, if you will, up 0.44. King dollar up 15 ticks, considering it was down this morning. We're going to take a look at the dollar. We'll take a look at the currency marketplace out there. And, we'll take a look at the earnings that are coming out. I know we've got Amazon. I believe that they missed. We'll take a look at everything that you want. Again, 877-927-6648. And you want to watch this on Tiger TV because you're going to see my charts, you're going to see my screens, and I'm absolutely going to teach you, what's going on in the marketplace, some of the sacred geometry. What I've got up on the screen right now is the picture of the Dow chart. You can see closed out the day at 632.91, really a relatively flat day, if you will. And what the Dow is trying to do out here, the Dow is one of the charts that really doesn't have a completed pattern out there, if you take a look at it. What you're seeing here on the screen, you're seeing what would be a 1.618 butterfly pattern that would take the Dow up into the 900 range. And that would complete the pattern. What that would also do, folks, is that would take the Dow all the way back inside the May 2nd highs out there. The high on May 2nd, folks, is 12,876. Low on that is 12,784. Now, we did trade into the 12,784. So you have tested that swing point. You just haven't gotten up over it. And as long as you stay up in these areas here, it looks to me like what the Dow wants to do is get up over, test that. We'd like to see it test that on lighter volume, close below it. Well, when I say we'd like to see it, we'd like to see it in order to be able to give us a feel for what the market wants to do. That's all I mean. When I take a look at the markets, I take a look at it both from a bullish standpoint and a bearish standpoint. It doesn't matter to me which way the markets want to trade because I can make money in either direction, folks. And that's what we want to be able to teach you to do, because if you were taking a buy and hold strategy, over the last 10 years, you would just simply not have made money. Whereas here, with TFNN, you absolutely can make money. Let's continue taking a tool around the U.S. markets, if you will. So let's go over to the S&P and take a look at what is it that we're looking at the S&P. Now, one of the things that you'll see on this chart here, you'll see a golden cross. Now, a golden cross, folks, is where the 50-day crosses the 200. Now, I use the exponential moving average, not the simple moving average. And so you can see, and what that is, folks, that is the sign, if you will. Money managers, they take a look at this. A number of traders look at this. But this is where you start to get into, if you will, bullish territory. Because I'll pull this screen back a bit here, and if you take a look at using just simply this one tool, this is a small tool, but if you take a look at right back here, when I say right back here, we're talking about the December 07 time frame when the 50 crossed through the 200. And if you just simply look for bearish outcomes at that stage, or Better yet, maybe you just simply took your money off the table, because I know 70% of the folks that are out there, folks, 70% of the folks out there have got their money in 401ks, averages over 100 grand, at least in there, and you're not being able to go ahead and short the market in most instances, not all instances, but in most instances. So there are times when you're going to want to be able to take the money off of the table, and one of the tools that you might want to use is just simply this 50 and 200-day moving average. You can see how the market just simply cascaded down through there. Now, what I like to use are leading indicators. Leading indicators are these butterfly and Gartley patterns. And what you'll see right down here in this light blue area, coming back into the March 09 time frame, what you had was you had a butterfly expansion pattern here, about a 1.272 butterfly expansion. And folks, you can see here, that was a leading indicator. That was a butterfly buy, if you will. And in this case here, if you had just simply waited for the 50-day to cross over the 200, you wouldn't have gotten back into the market until August of 2009. The market down here was in the lows, was down in the S&Ps, down in the 690, 670, 660 area, and you would not have gotten the crossover until the S&Ps were in the 1,000 area. So you want to be able to stay tuned to us, use these different patterns that we have, but what I can tell you is just simply look at this chart here, and as the 50 crosses over the 200, you are certainly in bullish territory, coming all the way up. In fact, you didn't really cross through it. You just kind of touched it a bit, coming back into the July time frame in 2010, and you dipped down just below it in September 2010, crossed right through it, and that's when the market simply moved up. Well, we had the exact up. Now, when the 50-day crosses over, it crosses through it to the downside, that's what they call the death cross. So you got the death cross and the golden cross, and you can see with the market having made this golden cross, you can see this red line that I've got here. This is a kind of a shorter term trend line, if you will. And in fact, if you take a look at the Dow, it hit it yesterday, came right down to it. In fact, today pretty much did the same thing. We're trading inside this little triangle here. It's getting tighter and tighter and tighter, and I promise you, the markets are going to bust out either to the top side or to the bottom side. And we take a look at here, you're taking a look at this larger light blue pattern. Folks, that is a Gartley sell pattern. So the SPYs have put in a Gartley sell pattern. We're just hanging up here towards the top. The question is this thing going to go ahead and fail? And what's cool about these patterns is these patterns work 70% of the time. So when these fail, this means that you would see much higher price coming, not just a move getting back to the May highs. The May highs here in the S&P would take us back up into the 1360 range. But I think if this busts through this area, you will see much higher price. You will probably see prices here. Well, I'm not going to draw it in just this moment. Let's go take a look at the Qs. Let's go see what where the NASDAQ is doing. We'll take a look at the NASDAQ chart. Out here, we'll pull that up. Where are we at here? We got the NASDAQ chart. And on the NASDAQ chart, what you're doing is just simply, hanging out here at these highs. Now, what you want to pay attention to on the NASDAQ is really July on the 26th. So 1, 2, 3 trading sessions ago, what the NASDAQ did up at the top was it made a bearish engulfing pattern. And that is, you want to take those can only be made as you're moving up into a market, as the market is moving up. You make a bullish engulfing pattern as the market is moving down. So it's a sign, and you didn't even test it today. We thought we were going to blow through that. You didn't test it today, and that's what's going on in the composite. If we take a look at the NDX 100, the NDX, you're going to see really the same signal that was out here coming into the 26. Now, what you did today, the NDX on the 26 got up to 2479.31. In today's trading, you got up to 2481.51. You closed back below it. And oftentimes, these bullish or bearish engulfing candles will get tested. Now, if we take a quick peek here over at the, maybe we'll go switch over to the ETFs, since many of you trade those. And what I've got up on my screen here right now is I've got the small cap. So I've got the IWM. Now, what you're going to see here in the IWM, folks, is you're going to see two patterns. This purple area here is what you would take a look at as a 0.786 Gartley sell pattern. And it's really a beautiful pattern because you can see down here, and what I'm talking about down here, I'm talking about if we go from October 4th, where the IWM made a low of 60.09, and that was our A point, if you will. Our B point came into October 27th. Now, October 27th, a really key day. We've been using that day here as kind of a signature as to what the market is doing. If you're taking a look at the small caps, you did 129 million as you were making your B point. Then what happens is just normal breathing patterns. The market starts to pull back. And the normal breathing pattern is pulling back to the 0.618 area. Sometimes you pull back to the 0.786. You know, if you're going to come visit us here in Clearwater, you're going to visit us at Suite 618. How did that happen? Oh, that is a beautiful thing. Now, so the market pulls back, and it pulls back into November 25th. You know, right when all of us were coming back from Thanksgiving, and when it pulled back there, it did a 0.618, a 61.8% retracement. That was our C point, our A to B equals C to D. Took us right up into this 1.272. And what you're seeing here, if you can see it, this light blue area, if we just simply use the October 27th as one of our key dates out there, which we do, what you've done is you've done a 1.272 expansion off of that into the high that was made on January 26th. So now what you have here in the small caps, really a great set of patterns here, because ordinarily you could have just taken the butterfly pattern. That's the light blue pattern that you're looking at out there, and that alone would have given you a 70% chance. That would be a butterfly sell signal. But when you have a pattern within a pattern, folks, that is a beautiful thing. Why? Because that puts the odds of success even more in your favor, if you will, because you have two patterns that are completing in the exact same area. Well, you've got the Gartley sell pattern. That started all the way back at the July 7th swing point high. Now, if this gets taken out, it absolutely does mean that there are higher prices coming. If you're going to say, well, Steve, just how high can it go? Well, the beauty of a 0.786 retracement, folks, is that first you'll come back and you will do a move of a move. That would take you up to the July 7th high inside the IWM. That would be in the 85.97 area. But because you've got these two patterns that are completing here, this is telling you that you would have some real energy. Maybe you would finally start seeing money coming in off the sidelines. I'm not saying that is what's going to happen here first, but that is a possibility. If this area here gets busted, what you will see is the small caps move beyond the 85.97. In fact, you'll see them probably up around the $93 area. That's if this pattern here breaks. Let's go to William in Tampa. William, thanks for calling. Thanks for holding.
Hi there.
How are you doing today?
Very good.
Hey,
I've got a question for you.
Yeah.
I have been watching a stock just tumble all day, PPO.
Okay.
It's traded about 60%. Today's volume's about 60% of its outstanding.
Did you say tumble or did you say fall off a cliff?
Take your pick.
Okay, I think that fell off a cliff. 26 million shares today, trading down at 38.08. So what did you want to do with this?
I'm debating buying it in after hours.
You are?
Yes.
And why would you be doing that?
Virtually everybody since over half the shares that are out have sold.
Yeah.
Virtually everybody that wants to sell is sold.
Ooh, you don't know that. I mean, I don't even know where the market's going to go. I will tell you, this is not a freight train that you want to get into, but stay on the line. We'll come back with William. We'll take a look at PPO and anything else you want, folks. 877-927-6648. We'll be right back, folks.